Hello there. Today is Monday, June 30th, and this is the June edition of the Kluge Wealth Advisory Group Client Connect video. I hope everyone's having a great start to summer and is looking forward to lots of fun in the sun. In today's video, we're going to be covering off a number of segments, including a few housekeeping notes, a portfolio update, as well as your frequently asked questions. So let's jump right into it. Before we jump into the meat of this month's video, there's a few housekeeping notes that I want to share. The first is that even though summer is here, we will still be here. So if there's any questions you have or anything that's important in your financial world, please reach out, let us know. We will be here to help. The second is that barring any major events, we will be moving the frequency of these videos back to monthly for July and August. Third, the TFSA information on the CRA website appears to have been updated. So if you're looking for your TFSA back contribution room, it's now there on the CRA website. And last but not least, we just want to take a moment to thank everybody for the last 3 years here at Wellington Altus Private Wealth. We moved over May 27th, 2022, and believe it or not, we are now 3 years and 1 month into our journey here. So I want to thank each and every one of you for your trust and confidence, and we look forward to doing fabulous work as we move forward. In terms of a portfolio update for June, there are a few thoughts I do want to share. I will start off though by remarking that June was another very good month, which follows a good month that we saw in May. So good news is good news. The second thing I wanted to note is that we don't really have any changes to talk about in the portfolio here for the month. We've shared those in previous videos, and the only thing that I would like to reiterate is that I think that the first 6 months of the year really do constitute a bit of a reset in the economy and the markets and investor psychology, and so that we have almost completely positioned the portfolio for a reset in the cycle overall. So we are repositioned for the reset. Now, as I mentioned earlier, we have celebrated our 3rd anniversary here at Wellington, which means that for clients that were early adopters, we now have 3-year trailing numbers available. And I did want to make a couple remarks on this because as I've been reviewing the numbers and comparing them to benchmarks, I do want to share that, again, despite everything that we've been through, starting off with a 12% drawdown from July 2022 to October 2022, then a big rebound in the market through 23 and 24, and then another drawdown into April of 25 and a rebound. Through this entire cycle, all of this rigmarole, we've been able to produce some very, very strong numbers, which I think is a really good testament to how robust our process is here. So we'll be able to share those with you as we do reviews going forward. And of course, if you have questions on that, we're happy to touch on it. But at the bottom line is June's a good month, and I think that as we look back in the longer term, in bigger picture, which is really what's important, I think this forward-looking process that we've developed over time has really proven its worth here over the last 36 months. Let's jump into your questions for the month of June. We saw questions on a number of topics, including what is the Trump agenda, what is the outlook, what is the impact of geopolitics on investment returns long term, as well as what is a stable coin. So what I'm going to do is give a brief answer to each, and then we'll cover off each of those questions in a little more detail in subsequent clips. So in terms of the Trump agenda, the bottom line is that they're legislating based on the idea of wanting to increase productivity growth in the United States. So each worker or each unit of labor is more productive, produces more GDP. Moving on to the next question, geopolitics, for example, the 12-day war between Israel and Iran can create volatility, but very rarely does it actually have a lasting impact on markets. Usually it's an opportunity if you're not in, or frankly something to ignore if you're invested. In terms of our outlook remains positive. All of the indicators that I have that have been successful here, especially post-COVID, are indicating a positive outlook for the market over the next 12 to 18 months. And so, with that evidence, I must be positive. And finally, what is a stable coin? A stable coin is a money market fund, a cash account essentially, that lives on blockchain. And it just has a stable value. Doesn't go up, doesn't go down. That's why it's called a stable coin. So we'll get into a bit more detail in subsequent clips, but there's your rapid fire answers. Thank you. The first frequently asked question we're going to touch on here today is around the Trump administration's agenda. Now, we saw another wave of questions on this over the course of the month of June. I believe that was likely started by debate that we've seen in the media around what is known as the Big Beautiful Bill as well as news around the Genius Act, which is a crypto blockchain regulatory act. So the bottom line is that, as enunciated by them, the Trump administration's agenda is focused on productivity growth. They want to achieve productivity growth through fiscal reform, they want to achieve it through trade reform, and they want to achieve it through tax reform. They also want to embrace high productivity technologies such as artificial intelligence and blockchain. So that is their agenda. And of course, I always want to make a note here that these certainly does not convey any political opinion on my part, and we'll always let future historians figure out if they're successful or not. But the bottom line is that seems to be the laser focus of the administration, and that seems to be, from at least from an exterior perspective, the way in which they're trying to legislate at this point. Another frequently asked question that we saw over the course of the month is asking, what is a stablecoin? So a stablecoin is a crypto token that has a stable value or a fixed value. Unlike other crypto tokens like Bitcoin, Solana, Ethereum, Sui, which are highly volatile, a stablecoin is designed to be exactly that, stable. The price should not vary at all. And in order to create that stability, there's a number of strategies that are used. But the most popular, and frankly the most credible, is one that backs each stablecoin dollar for dollar with US dollars or US treasuries. So what you effectively have is a on-chain, blockchain-based money market fund. Now, where are these things used? Well, the first is that unless you're buying cryptocurrency through an ETF on an exchange, you actually have to buy a stablecoin first before you buy crypto. So for example, if I were to want to buy Bitcoin off, not through an ETF, but on-chain, I would first have to open up an account, I would have to buy stablecoin, and then using that stablecoin, I can then go out and purchase Bitcoin. So really, stablecoin is the on-ramp to the crypto blockchain ecosystem. It also has utility in terms of payments in underbanked nations, as well as money transfer in underbanked nations. And I would really want to emphasize the potential importance of this, because there are, by certain estimates, between 4 and 5 billion people on Earth who are underbanked. So it gives an opportunity for individuals who are underbanked to get money transfer services or payment services at a fraction of the cost of traditional money transfer payment services, like Western Union. Recently, we have seen some legislation in the US that actually formalizes regulation around stablecoins. So the Genius Act, which just recently passed the US Senate, will regulate stablecoins like money market funds, which means that if you have a US-based stablecoin, it will be audited on a very, very regular basis, and will be subject to the same regulatory compliance constraints as any money market fund, whether that is regulation imposed by the state or regulation imposed by the Federal Trade Commission. So that is the quick summary there of the stablecoin universe. And of course, happy to discuss any questions you may have on this. Over the course of the month of June, we did see a lot of questions around the impact of geopolitical events on the markets. Now, this is of course connected to a lot of the headlines and coverage that we did see of the Iran-Israel war. So I'll jump right to the bottom line here and say that geopolitical events, with very rare exceptions, create short-term volatility, but do not disrupt the long-term underlying trends that are in place, either in markets or in the economy. And you can see that encapsulated in a sort of market aphorism about geopolitical events, which is you want to sell the buildup and buy the invasion. Or an older timey version of that would be sell on trumpets, buy on cannons. The bottom line is that when a geopolitical event develops, you do see fear, you do see trepidation, you do see uncertainty, which can create some market volatility. But as soon as the market gets a handle on what's actually happening, then it's going to start to recover and move forward, which makes sense given the overall rubric and the way in which the market does operate. So again, unless a geopolitical event is a very, very rare one, like World War I or World War II, it has no long-term impact on markets, does create some short-term volatility, which can be an opportunity, but again, no long-term impact. Thank you. So moving on, the last question that we saw quite frequently over the course of the month of June was about our outlook for the markets and the economy. And this makes sense. Again, we have recovered from a situation where there was an incredible amount of volatility that we experienced from February through to the end of May. So I did want to take a moment just to emphasize that based on the indicators that we have, based on studies of investor sentiment, based on quantitative studies of price and volume in the market, and based on studies of available money or liquidity, if you want to use a more technical term, all of these indicators are positive and are pointing at the potential for very, very strong returns as we move forward over the next 12 to 18 months. Now, of course, none of those indicators are guarantees, and all those studies are always built upon the framework of 85% of the time, if X happens, then Y follows. However, when you have three very powerful sets of indicators pointing in any one direction, I have to take the position that our outlook has to be positive because that's the best guide that we have here going forward. Now, of course, we are going to be paying very close attention to indicators. We're going to be paying very close attention to information as it comes out. And my promise, as always, is if the facts change, we will change our minds. Thank you. So, in wrapping this month's video up, we touched on a number of topics, including some housekeeping notes, a portfolio review, as well as a number of your frequently asked questions. So, if you have any questions or need anything from the team or I, please reach out, email, phone call, book us on Calendly. We are here to help, and we are here to get the job done for you. Thank you for your trust and confidence, and we'll look forward to talking to each and every one of you soon. Thanks again.